right. I want to welcome everyone back to another episode of Forex Tech Magazine. This is your host, Lewis. Happy January 31st to you. If you have not yet made any money in the month of January, and today's your last day, my friend. Hopefully, if you stick with us, we can share with you some tips and tidbits that might help to turn it around for you. If you already have made a ton of money, then congratulations. You're one of those for you. All right. But before we get into any of that, we want to get into this, which is the disclaimer, and it goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share with you should be considered to be investment advice. If you are in need of investment advice, then our sincere suggestion to you would be to consult with a licensed investment advisor. Anyway, now that we got that out of the way, let's go ahead and get into what you came here for while I fire out this text message. Okay, let's see here. And of course, this is not the pair that we're looking for. We got something else that we're looking at. Love doing that, just messing with people. Let's see here. So let's get into, if we could, Great Britain Pound, New Zealand Dollar. This is the one that we are currently in right now in the demo account. And what is happening? It looks like this thing is stair-stepping its way down. So right now, it's negative by about 1,100. And the question is, well, how long do you hold on to it for? Well, in this particular account right here, because we have such a high account balance, that 1,100 really doesn't affect our overall account balance in a negative way. So that's the reason why we're holding on this particular one. Close this out. Let's see here. And as you can see, it is at the 6.18, right? The 0.618 fib extension, and it seems like it's holding pretty well right there for right now, right? But it also held at some of these other points as well, right? Came here, maybe held for a little bit, came down to the next level, held for a little bit, now it's holding here. So the goal will be to see how well and how long it will hold. And then, of course, what we're doing is looking for opportunities to buy into the market. And the first opportunity to buy into the market would be once the price crosses over this downward trend line, which it has not as of yet. It is still below it. So right now it's in sell position. And remember, if we cross below the A, then that means that this pretty much is done for, and it would be opportunity to just look to potentially get back in this market, but going in the opposite direction. Not too worried about it. Typically, I mean, this is just one of those things where price has the ability to pull down. I mean, this happens, Unfortunately, it's one of those things where you get into the market and you never know which way the market's going to go. That's why it's so important that when you trade, you don't over leverage, because what happens a lot of times is that people get into the market and they say, okay, this thing is going up, and they do the analysis and they feel very strongly about the conditions of the market. They go in, they'll use so much leverage that they don't really have much room if the market goes against them, right? And then what happens is the market goes up, as predicted, and then as soon as the market starts to pull back below where their entry point was at, then they wind up getting a margin call, and their account balance gets dropped down significantly because they were too leveraged in that account. So you got to be real careful about using leverage. Like I said, leverage can be good, but it can also be bad. And you got to factor that in to wherever you place your stop loss at, right? So if you're using a lot of leverage, then you may want to use a more of a shallow stop loss. If you're using a shallow, or if you're not using a lot of leverage, you may place a deeper stop loss. You know what I'm saying? Or vice versa, if your account can accommodate it. Now, this count right here can definitely accommodate that. So we're okay with taking this loss if it comes down to it. If not, also the possibility that price may bounce from here. Price may go down to this lavender or blue line here, and price may even go down to the green, right, before it turns around and begins to push back up. So it's one of those things where you have to watch and see how the market plays out. There's no guarantee that once you get into the market at any given point, the market is just going to skyrocket up to where you want it to be, where you need it to be at. Just the market doesn't play by our rules; it plays by its own. And the whole point of using the ABCD analysis is to be able to go in there and be able to help us to get, and really just kind of help us to have like a standard way of entering, exiting the market, right? To be consistent with it over time and put some consistency in our trading. And to, sometimes you're going to win, sometimes you're going to lose. I still think this right here is a good trade. And I still think there's a possibility for this trade right here to play out. I've seen it happen like this right here time and time again. And then I've seen, where it looks like, okay, this thing like it's definitely going to, continue down and get knocked out. And then all of a sudden it turns around, boom, price shoots back up. So it's one of those things that we'll look at. We'll continue to watch, and we'll see what happens, and trade accordingly, right? And one of the things that we do to trade accordingly is that if price breaks below this point 618, and let's say it goes down here to this area here, then that means that we need to change our price target from our red and bring it down here towards the blue. So that's going to be a little bit lower price target for us, but that's okay. Because we understand that that our price target was changed if our C now drops back out of the red and over to this bluish purple, lavender, whatever color here. Okay, and then also too, it may be an opportunity for us to go back in, and once price crosses over, it might be a good opportunity for us to go back in and to make some additional purchases in this pair, especially if it's has a new lower price target. Ooh, excuse me. Let's see how many pips away we're currently now. Currently 510 pips away. At our closest, we were it's crazy that our closest we were 91 pips away, and now we're like 510 pips away. So, got a ways to go to better make that up, but that's the market. It can make it up within a day or two. Trust me, things can turn on a dime. So, ideally, just be patient, follow the market, see what happens. Let's see, Jason Blake, what's up, boss? Why don't you build a Telegram chat? James Blake, hey, listen, what's up, buddy? Gotta take this in. I'm sorry, I think you must have already left. I'm not good with technology. Hey, what's going on? What's going on, man? What's up, James? Listen, buddy. Hey, man. The reason why I don't have that is I'm not good with technology, so therefore I'm an old guy, man. I'm not used to all the new stuff, buddy. So I'm just you know, emails is still the best way to contact me. So I don't know if you want to show me how to build one, man. I'll definitely be up. I definitely would be interested in it. I just don't know how to do all that stuff, man. It's just me doing this, up at night or whatever, and restless, not able to sleep. And so I just think it's pretty cool. I just learned how to stream this year. So, if something something that can benefit the community, right? And I can make it easier for you guys to learn how to trade or ask me questions or to whatever I can do to kind of help you guys, do better at trades. But just show me how, and I'd definitely be willing to incorporate it into what I'm doing, man. Thanks for the suggestion. I'm just old, man. That's what happens when you're old, man. You just technology just kind of leaves you. Hold on, I'm gonna type this in. I don't know if you're able to see or hear me or see me now or not. I'm gonna type this in. Oh, okay, good deal, bro. Good deal. All right, man. Appreciate it. So let's get to the next one here. The next one is so still remember it's a hold right now for this Great Britain pound, New Zealand dollar. Let's look at the Great Britain pound, Canadian dollar. Same thing here. Here goes your AB boundaries. Here goes your C, which bounced off of your support resistance line. Price came up. It made some good. It had some good buying opportunities, right? Where it crossed over your downward trend line, right? Your counter trend line, bounced over it, right? Gives you some good opportunities to buy into it, and then price began to just move down overall, right? And then we're kind of sitting on this support resistance line right here, which is kind of trending sideways for right now. So I think pretty much, and we looked at this last night too, all the Great Britain pound pairs are kind of looking for a direction right now. There was a bit of a sell-off. Of course, part of it had to do with the vote that happened the other day. There's still some uncertainty what's going on in the market with the Great Britain pound. But I still see where there's some buyers in the market. Some people are looking to kind of come into it. So I think there's still some uncertainty within this pair. But for right now, it's pretty much just a hold and wait and see type approach with this particular pair. And so if you're not already in a trade, if you're not already managing a trade, I would sit back and just wait and see what happens, because all it takes is some piece of information, something that you're not aware of that may leak out or come out, and then all of a sudden this thing's going to take off in either direction. So it's consolidating right now. I'll let it consolidate and then get back in at a later time. It says basically a swing trade. I am a swing trader, my man. I like swing trading just because I don't like the adrenaline rush of trying to go in and do scalping. It's for me, it's a little bit too much, especially when you're using leverage. I like the idea of swing trading using the ABCD patterns, just because it's for me it's a little bit more predictable, right? Because I feel like I that's my strategy. That's my go-to ace in the hole strategy. There are other strategies that I look at and I try to use. But for me, as far as with consistency, especially if I'm using money in a real account, I want to make sure I got something that I really understand, something that makes sense to me, and something that's somewhat predictable. And like I said, it's not going to always be 100% with any strategy that you use. But for me, just what I kind of learned over the years, that the ABCD pattern is a little bit more, it's a lot more rather consistent for me with the way I use it than some of the other trading strategies. And there's a lot of strategies out there, and I always tell people, find something, find at least one that works for you, right? And then use it. That's it. Trading doesn't have to be all this, complicated, patterns and things on your chart. You don't have to have like some butterfly chart and have to study the moon cycles and all that stuff to be able to make money in it. What you have to do is just be able to understand a simple strategy and then be able to apply it consistently over time. And then the other thing is that helps with trading is just plain old money management. And the reason why I like the ABCD pattern is just because it helps with all of that, right? Because when you look at your AB and then you find your C, right? So from here, now I can tell you what my risk to reward ratio is going to be, right? Because I can look at this and I can say, okay, well, this is my C here, and if I plan on putting my stop loss below my A, or right at my A, that means that I'm risking 330 pips, right? And then the question becomes, because if I know that my C is back here in the red, it means that my D extension is going to be in the red as well, right? So I bring that out. And I say, okay, wow, well, there's an opportunity to make 457 pips, but I got to risk 330 pips to get to it. Is it worth it, right? For some people, maybe it is. For some people, it's not. If you trade in the standard lot, you got to think about that. That's an opportunity to get 4,500 pips, but you got to risk 3,030 pips. Is that worth it? Maybe not. Maybe if you trade in a mini lot, it might be. Maybe, 450 pips to, you're risking 330 to get it. I don't know. For other folks, they might say, well, you know what? I want to go in, I want to risk it, but what I don't want to do is I don't want to put my stop loss necessarily right there below the A. What I'll do is I'll bring my stop loss up and maybe go back, 1/5 retractment below where I originally came in at, and that's going to put me back at, well, 25 pips. So now you got to say, well, it's 25 pips risk worth 450 pip return. Well, duh, absolutely. If I can risk $25 and make $450, why wouldn't I, right? If I risk $250 and get $4,500, why wouldn't I, right? So now it makes a little bit more sense. Also, too, is just to learn how to. It helps you with actively managing a trade, right? Because a lot of times we'll put static stop losses in place and we just leave them there and we don't move them. But one of the things that you can do as your price moves into the profit zone, let's say you get significantly higher than what you originally came in at. One of the things you may want to do is move your stop loss up accordingly. One of the things I like to do too is that once my price breaks above the B position, right? I like to move my stop loss if it's at the A. Sometimes I'll go ahead and move it up to the C, and just depending, I might even move it up until a take profit. Past my entry. So therefore, you got a risk-free trade on the books, which is really good, right? Because how nice is that to know that no matter what happens, you're gonna make money in the trade. So let's look at. So let's get back into this one here again. Hopefully I explained to you. I don't want to give you too much information, man. I don't want to overwhelm you guys with too much stuff, and I definitely don't want to bore you guys. I'm going to try to keep it as quick as possible because I know you got stuff you got to do, money you got to make, and you want to get back out there and get trading and everything. This right here is a Great Britain pound, Japanese yen. This right here was going up once again, like all the other pairs were, and we almost hit the price target on this one right here. But as you can see, price went up, and then price began to make its move down. Right now, it's currently trading down. And so essentially what we're going to be doing is we're waiting for price to push back up and get on the opposite side of this downward trending move that's making right now at the moment, right? And if you're not already using this software, this is a good software. This is Smart Trader software. Just full disclosure here, we are an affiliate of this product, and so if you ever do decide to download or register for this product and you do it from my site and you get the paid version, then they do pay us, and that's part of how we keep the lights on for this site, right? We do little things like this, but even if we wasn't an affiliate of it, I would still recommend it. And like I tell folks all the time, you don't have to use my site to do it. I mean, it'd be nice if you would, but you don't. It's a good product. I like it. I've been doing this for some years now, and out of the products that's out there, I think it's really good. And the reason why I think it's good is just because of the smart tools that's on it, like the smart fibs, right? Because a lot of people talk about using fibs, but the problem is most folks don't know where to place them at or how to draw them properly, and so that results in a lot of bad trades. And then they come back and say, well, Fibonacci doesn't work. I'm telling you, Fibonacci does work. It's just that if you're not drawing them right, if you're not placing it right, it's not going to work for you. Right. But anyway, as you can see, price is in a downward trending state right now. So you wouldn't go into this particular pair until price crosses back up. And unfortunately, when price crosses back up over here, you're going to be pretty close to your take profit. So it might not even matter. So let's look at this. So once again, this right here is a hold. Would not buy into the Great Britain pound, Japanese yen. I'll let that play out the way it's playing for right now. This right here is the Great Britain pound, Aussie dollar. Here's another one. And the Great Britain pound just really got devastated here towards the end of the month, man. As you can see, here goes another nice little sell-off. This is supposed to be a downward channel for the crossover, give you a good buy signal, and as you can see, initially it was a pretty good buy signal, right? Price crossed over, began to trek up, it came in contact with this confluence area right here, which has your resistance and your overall downward trending channel, right? Trend line, and guess what happens? Price hit it and immediately got rejected and begins to make its way down, right? Always, and I talked about this earlier on. about drawing your support and resistance lines on your charts. And one of the reasons why I always say draw your support and resistance lines is because it's going to help give you an idea of where you're at in the market. It says EU, let's see, the Euro, Aussie dollar. Can you try? Yeah, absolutely. You want to look at that one real quick, my friend? Absolutely. Let's pull that up. I'm gonna pull it up. So we're gonna make a quick segue here because my friend asked about the Euro Aussie dollar. Let's look at it. Okay, so first thing we see right here when we look at this, what do we see? Well, it looks like we see prices moving down, right? Move down, move down. But what we want to do is, because this right here is an hourly chart, we want to kind of back out and get a bigger view of what's happening here, right? So this is a daily chart. Then what we might want to do is let's see if we get a bigger chart, bigger view. Weekly chart. Let's see what on a monthly chart looks like. Monthly chart. Okay. So what do we notice here on the monthly chart? Well, if you notice on the monthly chart, right, we got a low, we got a high, we got a higher low, higher high. Looks like it's going sideways for a minute. It's trying to go up. So what we notice here on this monthly chart is that price is trying to, it would appear that it's either trying to move up or it's moving sideways, like it's moving up and to the side, right? Remember, the market can only move three directions, right? It moves up, it moves down, it goes sideways. That's it. And usually it's moving in a combination of the three. It's either moving up to the side or down to the side, right? And if you look right now, right, price came up, bounced back down off of this support, did it twice, boom, boom, went up, hit the resistance, boom, bounced back down to support, boom, went back up to resistance, boom, up to resistance, boom, up to resistance, and now it's coming off of resistance right now, right? That's on the monthly. Let's look at it on a weekly. How does it look on a weekly? Let's take a little bit closer look on a weekly. Boom, right? Still same thing, right? Price is moving up, but it's right here at this support. I mean, it's resistance, right? Push back off of that resistance. So the question then becomes, well, what's going to happen next, right? So one of the things I always ask people, what do you do? Do you buy a resistance or do you sell a resistance? Typically, you're going to, what, sell a resistance, right? So we put our smart fibs on here, and this is on a weekly chart, and it's just us trying to gauge what potential may be here for this particular pair, right? This is bouncing off of a 50 retracement. And remember, 50 is not a Fibonacci number. It's actually a gain number. So if you start studying like Elliott waves and gain theory and all that stuff, you know that the reason why they put this in or add this into Fibonacci retracements is just because the guy, I think his name is WD or WE Gain or whatever, when he came out with this whole theory, he says that once price retraces 50% of his move, then it typically starts back in the direction of the original move, right? And as you can see, I mean, it's pretty right because it pulled back to the halfway point and all of a sudden now it starts going back up again. Did the same thing right here, pull back to the halfway mark and it's going back up again. So now the question is going to be, will it pull back to its halfway mark again? Or will it continue from here? Or will it continue to go down from here, right? That's what we're trying to answer. And right now, based off of where it pulled back to, the potential for the take profit for this one is somewhere up in here, which is about almost 2,000. This is what, 1970 pips. The risk is 890 pips. So risk reward ratio looks pretty good so far. This is on a weekly chart though, however, so don't trade off a weekly. And don't trade off a daily, but these right here just kind of giving me ideas, kind of giving me thinking about where we at in this trade, and what we should be doing, what we should be looking at for this trade, right? Okay, so let's look at oops, no, do that, sorry. So if you see here, you see where we put the smart fibs on here, and this right here is your A, B, and because price went below that A, that whole fib sequence got negated. So you gotta come up on here, you gotta do it again, and then you see 1, 2, 3, 4, 5, 6 Fibonacci sequence here off the daily chart, and we see a pullback here on the daily. All right. So what we see is we see a move definitely that's happening from your support going up to your resistance, right? Couple things to be mindful for, right? Even though we see our target here, right? This is on the daily chart, and we already looked on the weekly chart and in the monthly chart, and these all say that this thing definitely looks like it's at a, it was moving up to the side, right? But it's trending kind of range bound right now. So you got to be careful with this one. This is going to be kind of a tricky one, but I'm going to show you a trick to this right here, right? You're right here at resistance, right? Price has already tried to go over. Let me see. Price has already tried to go through resistance, here, here, and here, and each time it did, price got rejected and pushed back down, right? The only thing you really got going for you here is the fact that, it made a higher low, right? And it's possibly potentially still making a higher low. So that means that there's still the potential, right, for this thing to push on through, right? That resistance is there, and if that's the case, then your target's going to be here, right? Couple ways that I will probably trade is one. The first part of the way I will probably trade is would be making my price target my resistance, right? And then if once price is able to push through here, and then remember what's going to typically happen, price is going to push through your resistance and then it's going to pull back. And then after it pulls back, then it's going to push back up again. Then you come in and put your second target, which would be here, right? Which is going to be your red or your lavender or your green. Just depends on how far this thing pulls back. The other thing you got to keep in mind, right, is if price is actually in the buy zone, right? And so how do we figure out if price is in the buy zone? We come over here, we look at a trend line, we look for a downward trend line. Boom. Boom. All right. Let's crossed above our downward trend line, so price could potentially be in the buy zone here, right? The one thing I don't like, the one thing that kind of scares me is right here is that I still see red, and I don't like to buy when I see red. I don't like to buy. I only like to buy when I see green. That's just me. But looking at this right here, it looks like this could be a potential buy, right? It definitely looks like it could be a potential buy. The main cause of concern, though, is just that you're right here by this resistance, right? And so you gotta just use caution with that. This particular pair here, let's see, from where we at right now currently to where the A is 461 pips of risk to get this down a little bit. So 460 to get wow, to get 1488. So wow, your risk to reward ratio is definitely where you want it to be at for this one. Oh, I'm sorry, this is on a daily chart. God, no, when I was looking, I was like, man, this thing is like a lot. All right, so on the daily chart, it looks good. Daily chart's telling you it could be a potential buy, right? Damn, glad I caught that. Like, wow, that's a lot. I don't trade off the daily chart. I trade off the hourly chart or the 2-hour chart. Let's look at that. Sorry about that, guy. Hey, you still with me? Let's see here. All right, here we go. This is where we need to be at here. Daily chart, yes. Hourly chart, no. All right, hourly chart looks like it's still in some type of retracement mode right now. So wouldn't do it on the hourly chart. Don't see the upward momentum. Don't see it on the 2-hour chart either. All right. So here's the thing, right? If you're looking to trade this pair, right? It's not done. If you're looking to trade this pair on the daily chart, right? It's giving you a clear indication that this thing is in a buy mode, right? Right? That you can get in here and buy. You got to use caution though, because you're right here at resistance. So anytime it gets close to this line or comes up against this line, it's got potential for this thing to drop back down. Remember, these support and resistance lines are basically U-turn points in the market, right? These are points in the market where a price has hit previously and then made a U-turn, and that means that it can come back in there again, hit that same point, and make a U-turn. It's just points where a lot of buyers and sellers are very aware. A lot of them have stop losses at those places and take profits at those places. So as soon as the price gets close to it, boom, hits a U-turn and go back in the opposite direction. Usually it takes something pretty powerful to push you past it, right? And right now this thing's been trending sideways for a minute, okay? But there is a potential for it to press up, right? So if this is something you're going to be taking, use caution. It is, or it has rather, crossed over into the buy zone, right? Boom, right? See, this was the downward trend line right here. Sell, 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 sell. I believe this right here is our C at the moment, right? Price went over to the buy zone. It's kind of a weak buy, right? But it's buy nonetheless, right? And it's kind of drifted sideways, right? It looks like it may be getting ready to go back into the sell zone here shortly. But for right now, it's in the buy zone, no matter how weak it may be. But the problem is we're not seeing any type of buy signal on the lower charts, right? So right now everything on the lower charts is still just saying sell, 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 right? Don't have anything where prices beginning to push up, right? So for me personally, what I would say, stay out of this right now, put a hold on it for right now, wait till price on the lower time frames go into the buy signal, right? Get on the buy side of things, and make sure that the price on the daily is still on the buy side of things. And if you get both on the buy side on the daily and buy side on like on an hourly or a 2-hour chart, then yeah, place the trade, man. Go for it. See what happens. You know what I'm saying? Make sure you use your stop loss for this particular pair here. Probably would keep my stop loss below the A, all right, to give it some room to maneuver. And then looks like you got some pretty good risk to reward ratios already kind of lined up in this particular pair. You know, play it out, man. See what happens. If your account balance is not big enough for you to be able to sustain a loss, if you put your stop loss back at the A, then make sure you're using a smaller, a smaller lot size. Don't try to go with a standard. Maybe try to go with a mini or a micro account, something like that. Yeah, absolutely. You're welcome, my friend. You said it is 15800 buy. Let's look at that again. 15800, 158. I don't know if 58 is if that's a buy or not. Typically, when you get those numbers like that, where it's like, those clean numbers, just that it's that 1.58, $1.58, just clean numbers. Those are numbers that typically, people will put in, and you get a lot of people that will have those numbers in place for entry or exit points. I wouldn't say it's necessarily a buy right now. And once again, remember the reason why is because even though on the daily chart it looks like there's potential buy, right? It's giving you a buy signal here because you crossed over the it keeps going out. You cross over the downward trend line, right? You made a counter trend line break. I'd still be cautious because it's a weak break over the counter trend line. We broke over it, right? But now it's kind of break over it, but it's kind of moving to the side, and now it's moving down, right? So it's potential for this low. I mean, for this thing to go lower than what the low was here. And if that's the case, that means that you make a new C, right? Because remember, if this goes lower, if where price is at now goes lower where price was at here prior, and now all of a sudden you got a new C, right? And if you got a new C, that means you got to do what? You got to come in and you got to find a new counter trend line break before you get authorization to go ahead and start buying into this market. Remember, because the only reason why we're looking at this right here as being an area where we can say, okay, this has some type of significance, is because we're looking for the A, B, C, D pattern. We found the A, we found the B, so always looking for that C, right? Because that's going to be our U-turn in the market. And then what we're going to be looking for is, okay, this is the C here, and it turned and it made a U-turn in the red. That means our D extension is up here in the red, right? So it's gonna be our take profit. If it turns in the the lavender or the green, then we want to be looking for the lavender or the green to be our extension, right? And if price ever drops below that original C, well, then that makes us start looking and say, okay, well, then this right here must be the new C, right? And if that's the case, we want to see what area it, U-turned at, because that's going to be our new take profit. But at the same time, what we're going to have to do, if it drops below the C, that means we're going to have to be looking for a new counter trend line break. Because if it drops below the C, that means that price was trending down, right? It was trending down. And if it's trending down, we don't want to buy when it's trending down. We only want to buy when it's moving up, right? And the reason why we want to buy when it's moving up is because of momentum, right? We want to capture that momentum and move with the market, not against the market. Because remember, if we're moving against the market, especially if we're leveraged, right, that's going to increase the chances that we get a margin call, which we don't want, right? Definitely don't want that margin call, right? And then you also don't want to take a, unnecessary hit to your account, right? If you're doing the right thing, you're playing by the rules, you know. You just don't know when the market's gonna, make that U-turn, right? And then if you're sitting there and you're buying when the market is obviously in sell mode, right? That means that you're gonna have to be along for the ride until market decides that it wants to start buying. So it's just always better to just kind of wait, be patient. And I know that sometimes it's hard to be patient, because you really want to get in, especially if you feel really good about a currency pair. You want to get in and you want to make that money. But one of the key things here to take away, man, is just patience. Be patient. Have patience, right? Get up, walk away from the screen, do whatever. I'd rather you go and let this thing make a big move up, right, and then get in, versus you trying to get in at the exact bottom, trying to time the exact bottom, and trying to be, right at 100%. Get 30% of the move, right? I'd rather you see you do that than try to get in and get 100% of the move, get in too early, and then lose big on your account. Okay, so hopefully that makes sense for you, my friend. Hopefully I helped you out with that. But for right now, like I said, this one right here on the lower time frames is definitely a hold. Right now it's selling off. I don't buy when it's selling off, even if it's in the buy zone. I only wait till it's in the buy zone and it's moving up before I buy. So right now, this would be a hold, and I definitely don't trade off the daily. I trade off for like the hour, maybe the 2 hour time frame, and neither one of those are showing us that it's okay to enter right now. I mean, this right here is definitely sell-off mode. Same thing here, sell-off mode, right? Sell, 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 right? Nothing here says buy. So I wouldn't get into it at the moment. I sit back, I wait, and then once we get into the buy zone, right, then I'll be looking for my fibs on the hourly or the 2 hour chart. And once I get that, then I'd be looking at potential areas to sell. So yeah, you got a ways to go. So price have to actually cross above this here, start making new highs, new lows before you would actually get in and buy off of the hour chart. So you got a ways to go to get into this one. All right. hopefully that helped you out. You know, and what we do is we'll monitor this particular pair over the next coming days, and you know, every day we'll put a little segment where we come in and we'll look at this right here, and you know, see if there's an opportunity, when there's a good opportunity to get into this pair, and hopefully you can make some money with it. Okay? All right, my friend. So let's finish up what we were looking at earlier with these other pairs, the Great Britain Pound, Aussie dollar, Great Britain Pound, US dollar. Um, Once again, price hit that little confluence zone right there where resistance and the downward trend line met. And as you can see, price hit it and immediately got rejected. And right now, price is still moving back down. It's kind of consolidating here a little bit. Hopefully over the next, I don't say hopefully, but over the next 24 to 48 hours, actually probably even longer than that, maybe 72, you'll start to see some directional movement within this pair. Because I think what's happening now, we're going to start doing a little bit of consolidation. After all this information has already kind of came out about the Brexit, as we get more information coming back out, I think we're going to get a little bit more of a direction with this particular pair. And the last one here we're looking at for the Great Britain Pound is the Great Britain Pound US dollar. And as you can see, like I said earlier, none of these pairs are saying buy right now at the moment. All these pairs, oh yeah, you're welcome, my friend. You're welcome, my friend. Absolutely, man. Like I said, anything I can do to help you guys, anything I can do, you know, suggestion-wise, to make any of this stuff a little bit clearer, just let me know. You know, I don't mind it. Try to give as much information away for free as possible, just because I think it's good for the community to be able to share information with each other and try to help each other. So that way, you know, if you're out here and you're trying to learn, or if you're somebody who's a professional, you've been doing it for years, you know, share information, man. It's good, you know. No one person can make all the money, and I think there's enough out there for everybody to make. So if you have information that you can share with somebody and make their life a little bit better, why not give it to them, man? Give back to them, okay? That's just my philosophy. All right, so yeah, so this right here is a Great Britain Pound US dollar, and once again, it's moving down, right? Looks like it may hit a little bit of a double bottom here, but still, it's not where it needs to be at for it to for me to want to put money into it at the moment, right? It would have to cross above this downward trending line, which, as you can see, is actually kind of pressing its way up and making its way towards it. But it hasn't hit it as of yet, so therefore this right here will still be a hold. We'd like to wait and see what it does. It bounced off of this resistance right here. So over the next 48, 24, potentially, you know, this thing could go into the buy zone. If it does, here's your take profit right here, right? It may not be something where it's significant enough to make somebody want to get in, especially if you're looking at the risk-reward ratio, or it could be something where, especially if you see like there's a strong buy that comes in, you may want to just jump in there real quick, put in a tight stop loss, and make a couple of pips, and then get out, okay? But this is one that you'd have to watch closely before you get into it, okay? So that's it for the Great Britain Pound pairs. Let's look at our alternate pairs that we have here, which is I missed it. Oh, here you go. U.S. Canadian dollar, and then we'll also talk about the Aussie U.S. dollar here in a moment too as well. So this right here is a very weird pair, if ever there was a weird pair to trade. As you can see, overall, A, B, thought it was a C here, right? Obviously, you know, we just talked about this. It came back down again, right? So the low, which was here, which was a C originally, now goes to here, right? And it's still trending down. So this right here is definitely not a buy. This right here is definitely a sit and hold, because we're not even in the buy zone on the daily chart, right? We're, you know, sell-off mode here on the daily chart. So definitely not something you want to get into right now at the moment. I would say, oops. So for this particular pair, I would once again sit tight. It's gonna have a ways to go. I would definitely sit tight on this one right here. Yeah, I sit tight on this right here. Wait for it to play out. Once price crosses above potentially this line here, really this one here, but I'd even give it the benefit of the doubt. If it crosses above this line here, right, then I'll potentially be looking for, you know, buying opportunities on a lower time frame. Um, but this thing is really just in sell-off mode at the moment. And as you can see on the lower time frames, it's just selling off, right? Really no opportunities to buy here. So I would stay out of this one right here at the moment. All right. And then of course, if price goes below the A, which it has a ways to go for it to do it, then we'd be looking at overall potentially selling this product. I don't have my support resistance lines on here, so that might be something I could come back and do at some point. Because like I said before, it's always interesting to see where those U-turn points are in the market. But anyway, for this particular pair right here, hold and wait. I won't do anything on this one. Now let's look at the the Aussie US dollar. Now, this one right here, I hated this pair the whole month, right? And the reason why I hated this pair the whole month is because I was stuck in this pair the whole month, and I could not get any traction, could not get out of this thing. For whatever reason, it just would not move. It just moved sideways, and it made me sick. Man, I hated this pair. Until today. Because today I feel good about this pair. Today I actually love this pair, right? And the reason why is because I actually made money and got out of this pair. So I'm happy with this pair now, right? So let's look at this one here for a little bit before we wrap this up. So I was here on the hourly chart. Now what you're going to notice about this particular chart here is because I use the Smart Trader software, and I usually come in here and make my initial Fibonacci retracement lines, it automatically comes back in and put new lines in here once our D extension is hit, right? So pay no attention to this one right here just yet. We're going to talk about this, but what we want to focus in on is this line, this A to B line here, right? A to B, right? So when I originally came in here, I looked at this A to B, saw this right here to be my C, and said, okay, you know what? Let's do this. Oh, I'm sorry. Actually, no, I didn't. Let's go back. I'm lying. Here we go. This was my A to B here. Oops, boom. This was it here, actually. All right. And then this right here was my take profit over here. All right. Let me get rid of this. Let's see. All right. Yeah, so this right here was my original. I apologize. So this was my A, this was my B, and it had a very shallow C, right? Extremely shallow C. In fact, it was so shallow that it didn't even pull back to the original retracement, right? It didn't pull back to like the, was that 0.213 or whatever. It didn't even pull back to that point, right? It was so shallow. So I said, okay, wow, this must be a pretty good move, right? It's a lot of energy, a lot of momentum in this pair, right? It should be fairly easy for me to hit this price target. So I'm going to go ahead and just go ahead and place this order. Here goes my D extension here, right? Boom, started out really good. Price was moving up. I waited till price crossed over into the buy zone. Let me try to bring this in a little bit more. Everything looked great for the most part until we got right here, right? Within just a couple of pips of the D extension, right? And then what did price do? Price went down. I said, okay. And that was like on Friday, I think it was. So, okay, that's no biggie, right? It came there, it got close to it, 48.72. Hours from now, price will probably go back up, retest it. I'll hit my take profit. I'll make my money, I'll go home, right? But what happens? Nope. Price goes up, a little ways, comes back down. Stayed optimistic. Price goes up, price comes back down. Price goes down, goes up, comes back down. Price does not want to cooperate at all, right? In fact, price just starts moving further and further away from my take profit, right? And mind you, we came close to this back on what, the 11th of January, right? And then of course these lines that we got here are support and resistance lines in the market, because I had to make sure, I had to look at this and kind of reassure myself that, hey, you know what, we're we're making the right trade here, right? And that these are some U-turn points in the market. So let's, be mindful of those U-turn points in the market as we kind of wade through this trade, right? And what we notice is that overall, price actually went and pulled back into the Fibonacci's, right? Retracement areas, right? And actually pulled back into, I think it was that point 213 or whatever, 236, whatever number, before price began making this move back up, right? And that's why I tell you about, you got to make sure that your account can sustain, pullbacks. You got to be able to sustain movements, because you may get in, and if you use too much leverage, right, you may wind up getting a margin call. But thank goodness we didn't use too much leverage. You just came in with a regular mini lot, right? Price pulled down, went back up, and then finally today, I'm not gonna bore you with the long story, all the details, but finally today, price did what? Boop! Hit our price target. We got out clean, which is good. Made our money on this, which is a live account, which is cool. And now price is in the process of making another C, right? So here's A, here goes the B, and it's kind of following the pattern that it did earlier, which is making a shallow C, right, to kind of convince folks to get in, and that price is going to push up. Me personally, wouldn't get into this just yet. I think this right here is a holding pattern. Me personally, I think even though I see where you got your A, you got your B, I just don't trust this right here as being a C. I believe price is going to pull back either here or here somewhere before price pushes up. So I would hold for right now. If I miss this trade and price does push up, oh well, that's good for somebody. But what I don't want to do, and I wouldn't encourage you to do, is risk money that you don't have to risk. Wait for your trades to consistently come to you. And if you do that, I think you'll be more profitable over the long term. Sometimes it's better to miss a trade and stick to your strategy. Miss out on the opportunity to make some money, but sticking to your strategy versus getting to the habit of, bypassing your strategy or adjusting your strategy, modifying your strategy to try to get in there to justify you getting into a trade, and then you losing money. Because remember, man, the way we count wins and losses in Forex, man, is looking at your account, right? If your account goes up, you got to win. If your account went down, you took a loss, you took an L. I don't care what the I don't care what your strategy was. Just how we count. It's how we keep track. Who wins, who loses. Okay. So anyway, once again, for this one right here, I will hold on it. We made money on it today, which is woohoo! Thank God we did. But we're gonna hold on this right here before we get back into it. We're gonna let it play out for maybe the next 48 to 72. See what happens. Let it create a buying opportunity for us. So that would mean that price would have to pull back, and then it would have to cross over a downward trending line, and before we consider it to be a buying opportunity. And if you look on the daily, you're definitely in the buy zone in this particular pair, right? And so that's all we need to do now, just kind of wait till we get to the buy zone on the, see? We just need to wait till we get to the buy zone on the lower time frames before we get in here and start making a purchase. Buy zone. Anyway, guys, so that's it for me for today, right? Thanks for tuning in. Thanks for hanging out with me. Remember all the Great Brent pound pairs. Right now, we're pretty much in a hold pattern, man. I wouldn't, suggest getting in and buying on those. If you do, that's your prerogative. But me personally, I'd stay out of those for right now until we get a little bit more clarity, until we get into the actual buy zone of those. This one right here, the Aussie US dollar, we made money on it finally this month. But I don't recommend getting back into it just yet. I think it's going to be a little bit of a pullback in it before it pushes back up. Although I will say a lot of this pair's movement hinges on the fact with these tariffs agreements between the U.S. and China, and apparently there's going to be a statement I think it's going to be put out later today or tomorrow as to the progress that was made between the U.S. and China with those tariffs. Because remember, we're pushing up on I think it's a March 9th deadline. Because after that time, then the truce is going to end, and the tariffs are going to be back on for both countries. But right now, there's been a truce where they're not they're not enforcing those tariffs just as of yet. But as of March 9th, I believe that's when it comes back into play. And so the whole purpose of these meetings that they've been having since the truce was enacted was to see if they can get come to some type of agreement, some type of workaround, whereas we can do business together without having to tax the heck out of each other, right? To be able to do it. So, at any rate, just look to see that there's going to be some more movement in this pair right here over the next coming weeks. That's all I'm really trying to say. It's going to be some more movement coming in this pair over the next coming weeks. So it may present some opportunities for us to get in there and make some money in the market in this particular pair. Okay. At any rate, listen, it's been real. Thanks for hanging out with me, guys. I appreciate everything. I appreciate all the love. Appreciate all the support. Mr. Blade, hopefully helped you out here tonight. If you guys haven't already subscribed, man, please subscribe. We love getting more subscribers to the channel. Anyway, I will see you guys in today's Thursday, so now I won't see you guys. Today's Thursday? Yeah. Well, I'll see you guys next week. Anyway, God bless you. I'm not sure. I'll see you guys in that 24. I apologize. I'm sleepy. God bless you. Hope you guys make some money trading today. I will see you in another 24. Take care, and talk to you soon. Bye.